Hi, welcome back to Joe Blogs. In today's episode, I want to talk about the price of oil. The biggest single impact of Russia's invasion of Ukraine on the global economy was the movement in the price of oil. Immediately following the invasion, we saw the price of a barrel of oil increase above $100 for the first time since 2014. And interestingly, 2014 was when Russia invaded Crimea and annexed that part of Ukraine. So we're seeing a repeat of that pattern. However, over the course of the last 12 months, we've seen the price of oil coming down as a result of concerns over a slowdown in the global economy. But over the last couple of months, we've started to see the price of oil creeping back up. And it's now above $90 per barrel, which is the highest level that we've seen since November 2022. And when you look at the long-term average, it's also significantly higher. And you may be sitting there thinking, well, why is the cost of a barrel of oil going up? Because you've been telling us that the global economy is slowing down. And the reason that the price is going up is that the production is being controlled by OPEC+. So rather than a price of a barrel of oil being set entirely by the market, where supply and demand meet to give you the price, what we're seeing currently is a deliberate reduction in the supply of oil, which is forcing the price up. So what I want to go through in today's video is what the impact of this deliberate movement in price is going to be on both the Russian economy, because Russia is still one of the world's largest exporters of oil, and also on the global economy. So in today's video, I'll have a look at who the world's largest producers, consumers and exporters of oil are. We'll talk about OPEC+, which countries are involved in that consortium, and what the recent production cuts have been, and what the impact of that has been on the price of a barrel of oil. We'll then go on to have a detailed look at the movement in oil prices, and also what's happening to the price of Russian oil, because the average price of a barrel of oil that Russia is selling is now above the $60 cap that was introduced by the West. So we'll talk about how that's happened, and then I'll go on to talk about what the impact of all of this is going to be on the global economy. So before we go on to talk about all of that, I'd like to say thank you so much to everybody that's posted comments recently on the latest format for the videos. It's good to hear that you're pleased to see me back on screen. And if you'd like to support the channel, please have a look below where you'll find links to my Patreon page, where you'll find lots of other face-to-face interesting videos, as well as Buy Me a Coffee and YouTube Super Thanks and membership. In terms of putting the importance of the price of a barrel of oil into perspective, I thought it was worth looking at the global demand for oil. And this chart shows demand measured in millions of barrels per day, dating back to 2005. And what this shows is that between 2010 and 2019, there was a consistent and continual increase in the demand for oil. Back in 2010, the world was consuming around 85 million barrels per day. By 2019, that figure was up to 100 million. Now, because of the COVID-19 pandemic, where a lot of countries shut down completely, demand fell back to around 90 million barrels. However, as the world came back to life and recovered from COVID-19, demand has gone back up again. And the current expectation for 2023 is that total demand will be above 100 million barrels per day. So despite all of the talk about renewable energy and the movement away from fossil fuels and the introduction of electric vehicles, the world is currently using more oil than ever before. Now, in terms of which countries are producing the most oil, this chart shows crude oil production for 2022. And there are lots of different ways of measuring this metric, but I thought I'd just stick to crude oil. So as you can see, the number one producer of crude oil last year was the USA, who produced around 18 million barrels per day, followed by Saudi Arabia at 10.8 million, Russia at 10.7 million, Canada at 5.5 million, China 4.7 million, Iraq 4.2, United Arab Emirates 3.8, Brazil 3.6, Iran 3.5 and Kuwait 2.7. And as you can see from this chart, there are a whole host of other countries producing oil on a daily basis. Now, in terms of which countries are consuming the most oil, the United States is also top of this chart. And in 2022, oil consumption was estimated to be 19.7 million barrels per day, which represents around 20% of all of the consumption globally. The second biggest consumer was China at 12.8 million. India came in at number 3 at 4.4 million. Japan number 4 at 4 million. Russia 5 at 3.6 million. Saudi Arabia 6 at 3.3. Brazil were number 7 with 3 million, South Korea 8 at 2.6, Canada 9 at 2.5, and Germany 10 at 2.4. So in terms of where does that leave us for the biggest exporters of oil, this chart shows that Saudi Arabia is the world's largest exporter of oil, exporting over 7.3 million barrels per day in 2022, followed by Russia at 4.8, Iraq at 3.7, the United States at 3.6, Canada 3.4, UAE 2.7, Kuwait 1.9, Norway 1.6, Nigeria 1.4, and Kazakhstan 1.3. And in terms of looking at the top 15 exporters of oil in 2022, only 3 countries, the United States, Canada, and Norway, are not included in the OPEC Plus consortium that is deciding on how much production of oil to release into the international markets. The Organisation of Petroleum Exporting Countries, also known as OPEC, was formed in 1960 by Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela. And since that time, the organisation has expanded to 13 members, including the United Arab Emirates, Angola, Nigeria, Algeria, Libya, Congo, Gabon, and Equatorial Guinea. In 2016, largely in response to dramatically falling oil prices, driven by significant increases in US shale oil output, OPEC signed an agreement with 10 other oil-producing countries to create what is now known as OPEC+. And these 10 countries are Russia, which is by far the largest of the 10 additional countries, Mexico, Kazakhstan, Oman, Azerbaijan, Malaysia, Bahrain, South Sudan, Brunei, and Sudan. OPEC's stated objective is to coordinate and unify petroleum policies among member countries to secure pricing for producers, supply for consumers, and return on capital for investors, although the group is best known for its effect on global crude oil prices. The OPEC countries between them represent around 50% of the global supply of oil, and the 2 biggest players with the biggest influence are Saudi Arabia and Russia. Following the first face-to-face OPEC Plus meetings held in Vienna since the COVID pandemic started, it was announced that the OPEC Plus countries would be cutting their production by 2 million barrels per day from November 2022 onwards. And this decision was a direct result of the general fall in oil prices that was being experienced in the market as a result of a global slowdown and therefore a reduction in the demand for oil. However, the announcement of this 2 million barrel per day cut in production didn't really have the desired impact, and oil prices continued to fall. In February 2023, Russia announced a unilateral decision to cut its oil production by 500,000 barrels per day from March onwards, which represented around 5% of Russia's total production. And at the time, questions were raised as to whether Russia was doing this to try to increase the price or because it was struggling to be able to find buyers for its oil. And in April 2023, when the price of a barrel of oil was moving close to $70, OPEC Plus announced further cuts of 1.16 million barrels per day, with the biggest player in OPEC, Saudi Arabia, announcing that it was going to cut its production by 500,000 barrels. And in September 2023, both Saudi Arabia and Russia announced voluntary cuts on top of those agreed in April, with Saudi Arabia extending its voluntary output cut of 1 million barrels per day for another 3 months until the end of December 23, and Russia extending its voluntary decision to reduce oil exports by 300,000 barrels per day to the end of the year. And the impact of this recent announcement has been an increase in the price of oil. This chart shows the movement in the price of a barrel of Brent crude oil, which is the benchmark for crude oil, over the last 12 months. And what this shows is that in September 2022, a barrel of oil was trading for $93. However, by June 2023, the price of that same barrel of oil was down to $72. And if you look at the trend during that period, it was significantly downwards. However, over the course of the last 3 months, we have seen a significant increase in the price of oil as a direct result of the market manipulation that's being exerted by OPEC+, the increase in the price of oil isn't the result of a huge increase in demand. We are currently still experiencing a slowdown in the global economy. A lot of the major buyers of oil are struggling right now, so therefore we haven't seen a huge return to growth across the whole of the world. But what we have seen is a reduction and constriction in the supply. And if we expand the chart out to show the position over the last 5 years, you can see that the current price of a barrel of oil is the highest that it's been since November 2022. And if we ignore all of this chart from the start of 2022, because even in January 2022, which was a month before Russia's invasion of Ukraine started, the price of oil was being affected because there was a lot of nervousness as Russia were mounting troops on the border of Ukraine, and the world was worried that an invasion was going to happen, and so the price of oil started to creep up in anticipation of that maybe occurring, which obviously it then did. But if we look at the price of oil between September 2018 and December 2021, you can see that the current price of $92 is higher than oil was trading at any time in that period. Now, usually the price of oil is a really good barometer as to what's going on in the global economy. If oil prices are going up, then generally it means that we've got boom times, everybody's doing really well, the demand for oil is booming, and therefore prices are up. But the situation we have currently in the global economy is that the price of oil is being forced up through a restriction in the production of oil and the release of that oil into the markets. And this represents bad news for the global economy because oil is still a really important fuel source for most countries. A lot of countries are buying in large quantities, and as the price continues to go up, that's going to put more and more pressure onto the budgets for those economies. This chart shows the movement in the price of Russian oil over the course of the last 12 months. And you can see that the profile of this chart is very similar to what we've just seen for Brent crude oil. However, the values are somewhat lower. This time last year, a barrel of Russian crude oil was trading for around $74. Today, it's trading for just under $78. Now, you may be surprised to hear that Russian oil is actually selling above $60 because the West has imposed a $60 cap on the sale of Russian oil. However, the West can only enforce that cap if Russia is using its ships to transport the oil. And the reason that the overall price of Russian oil is above $60 is that Russia isn't sending all of its oil on Western ships. Some of it is going via pipelines to China, and some of it is going via ships that are owned by other countries in the world. So we've got a blended rate here. The oil which is subject to the price cap is selling for $60 because that's the maximum that Russia can achieve. However, other oil that Russia is selling is going for significantly more than $60. So the average blended price is $78. And if we look at the price of Russian oil over the last 5 years, you can see that $78 is actually higher than Russia was selling for at any time during 2019, 2020 and the majority of 2021. So on paper, this represents good news from Russia's point of view. They're actually seeing an increase in the income per barrel of oil that they're managing to sell. However, the problem that Russia has is that its volumes have reduced significantly, and the production cuts that it's announced alongside Saudi Arabia mean that the volume of oil it's selling has reduced. So even though it's getting a better price per barrel, its total revenue is down because when you cut your volumes, obviously that means you earn less money. And I think that's a really interesting dynamic because what Russia needs right now is cash. It needs as much money as possible to fund the economy and also to continue funding the war in Ukraine. So even though it's achieving a good price per barrel compared to what it was achieving 6 months ago, because the volumes are down, that represents a loss of income for Russia on an overall basis. And in terms of answering the question as to who's buying Russian oil, this chart produced by Visual Capitalist shows the biggest buyers of Russian oil in the period between the 1st of January and the 16th of June 2023. And crude oil sales are shown in red on this chart. So you can see that in that 6-month period, the biggest single buyer was China, followed by India. The European Union came in third, and I think that's interesting because the ban on the purchase of seaborne Russian oil was introduced on the 5th of December. However, delivery of a lot of that oil was actually delayed until after the start of the new year. So we've got some of those sales included, and then we do have a few countries in Europe who are still struggling to be able to secure their own supplies. predominantly landlocked countries that don't have any coastline and therefore are still having to receive by pipeline. So they're still buying an element of Russian oil. The fourth biggest buyer was Turkey. Number 5 on the list is the United Arab Emirates. And I think that's a really interesting statistic because the UAE obviously has huge oil reserves itself. So you may be asking the question, why would they be buying Russian oil? What's the point when you've got enough in your own backyard? And the answer to that question is it's because Russian oil was cheaper than using its own oil. The UAE decided that the deals that Russia was offering were so attractive that they would actually be a buyer because obviously they could then process that oil and sell it on to other parties. So basically they were being offered a discount and it was a deal that was too good to turn down. The next biggest importer is Singapore, followed by Brazil, the Netherlands, Saudi Arabia, who are in exactly the same bracket as the United Arab Emirates, Bulgaria, Slovakia, Malaysia, Czech Republic and Italy. This chart shows the total income being received by Russia for fossil fuel sales dating back to the start of 2022. And if you follow the channel, you'll know that we've looked at a version of this chart a number of times before. This one actually takes us up until the 3rd of September 2023, so it's the latest data that we've got. But the reason I wanted to look at this data now is to look at the total impact on Russia's income of the sanctions that are currently in place. Back at the start of 2022, Russia was earning around 775 million euros per day, which is around $850 million. However, today it's earning around 500 million euros per day, or around $550 million. So that represents a total loss of income for Russia of over $100 billion per year. That is a huge number for any economy to have to absorb. And if you look at the breakdown, you can see that the biggest single part of this chart that has reduced significantly is the section at the top, which represents pipeline gas. Prior to Russia's invasion of Ukraine, Russia was selling huge volumes of gas directly into Europe through the pipelines that it had constructed. And the most famous of these was the Nord Stream pipeline, which went under the Baltic Sea and provided around 60 billion cubic meters of gas directly to Germany every single year. Now, those pipelines were actually blown up towards the end of 2022. There were underwater explosions. There still hasn't been a categorical explanation as to why those explosions took place. There's a lot of accusations that Russia did it themselves because they no longer wanted to give any gas to Germany. And there are counter theories that the West decided to blow these pipelines up to make sure that the relationship could never be put back into place. But it doesn't really matter what happened. The bottom line impact from Russia's point of view is that they've now lost a huge amount of income that they were getting from that pipeline gas. And the problem that Russia has is that they haven't been able to replace that lost income by selling the gas to other countries because they don't have the pipelines in place to be able to deliver it. And neither do they have the facilities to be able to convert that gas into liquefied natural gas. So that income is up in smoke, literally. And what that means from Russia's point of view is that they are now more dependent on income from crude oil than they've ever been. And what this chart shows is that at the beginning of 2022, Russia was earning around 275 million euros per day from the sale of crude oil, and today it's earning around 300 million. So Russia's total income from oil sales has gone up slightly during that period. However, its total income from all fossil fuel sales is down significantly, and that is the key issue from Russia's point of view. Total revenue is down. That's why Russia is posting huge deficits for its budget, and that's why there's a major cash strain on the Russian economy right now. So what's the summary and conclusion today? Well, I wanted to post this video firstly to talk about what's going on with the price of oil because it's still a really important cost for the global economy. The vast majority of countries around the world are still using huge amounts of oil on a daily basis, and movements in the price of oil therefore feed through into the cost of everything. And if you've been following the channel over the course of the last year or so, you'll know that the initial impact after Russia's invasion of Ukraine on the global economy was devastating. We saw the price of a barrel of oil rising to $120 or so, and that caused a lot of pain for a lot of countries that are importing large quantities of oil. We've seen a number of countries moving to the verge of bankruptcy. But over the course of the last 12 months, we'd started to see a gradual reduction in the price of oil as a result of the global slowdown. Countries were buying less oil, therefore demand had fallen, and as you'll know from simple economics, when demand for a product falls, it generally results in a reduction in the price. However, the oil-producing nations didn't like what was happening to the price of oil. They didn't want their valuable export commodity becoming cheaper in the international markets. So OPEC, led by Saudi Arabia, decided that they were going to cut their production. And Russia, which isn't included in OPEC but is in the OPEC Plus larger group, decided that they were going to join Saudi Arabia at the forefront of these cuts. And that's led to the increase in prices that we've seen over the course of the last few months. Now, in terms of what the impact of this is for the global economy, it represents bad news, because the whole point of having a market price for a product is that when demand is falling, that product becomes cheaper. And when you're talking about a potential global recession, the price of oil is really critical, because if countries are producing less profit, they're generating less GDP. That means that they can't afford to buy as many things as they were in the past. So a reduction in the price of oil would marry up very well with that slowdown. It would mean that oil was cheaper, you could still buy the same amount for a lower amount of cash. So it makes oil more affordable and helps countries get through the downtime. It basically enables countries to reduce their cost base at a time when they're generating less income. But if somebody is manipulating the price of oil, such as OPEC Plus, and deliberately making the price of oil more expensive, that causes hardship for all of those countries that are slowing down. Because if they want to continue buying the same amount of oil, it's going to cost them more than it would if that oil was set at the market price. And that's exactly what's happening in the global economy right now. With the slowdown that we've seen over the course of the last 12 months, oil prices should have continued coming down and possibly would have been sitting at around $60 or maybe even $50 per barrel, which would mean that it was more affordable for everybody. But because the countries who are producing the oil aren't prepared to sell at that price, they've decided to cut their production. So even though we've seen a reduction in demand, we've also now seen a reduction in supply. And actually, that reduction in supply has more than offset the fall in demand, which has meant that prices have gone back up. So what this means for countries that are experiencing a slowdown right now is that their costs are going up, and that's going to put even more pressure onto those economies, particularly for countries who are large importers of oil, because they don't have their own reserves and therefore they have no choice but to continue making those purchases. So this is going to accelerate the slowdown for a lot of countries that are needing large quantities of oil. So clearly all of that is bad news from a global perspective. But what's the situation for Russia? Because Russia is a major oil producer and one of the largest exporters of oil in the world. Well, as we saw from the data earlier, the income that Russia is earning from its fossil fuel sales has fallen dramatically since the start of 2022. At that time, Russia was earning around $800 million per day from fossil fuel sales. Those earnings actually increased to around $1.3 billion per day at the peak of the market. However, today, the earnings are down to around $550 million. So that represents a loss of income on an annualized basis of around $100 billion. That is a massive amount of cash. And if you've been following the channel, you'll know that I've been posting regularly in terms of what's going on in the Russian economy. And Russia is posting huge deficits on a quarterly basis and is having to fund those deficits from its national wealth fund. And at some point, Russia will run out of cash. So it needs to generate more profit and more income. And cutting its production of oil isn't going to help Russia to do that. But the problem that Russia has is that it's one of the biggest players in the export markets. And because Saudi Arabia is stepping up and saying, we're not prepared to sell our oil at low prices, therefore we're going to cut production, Russia has decided that it needs to follow suit. It doesn't want to lose face. It wants to be seen as a player in the market and to exert control over the price of oil. And this really is a way of making the West suffer. It's a little bit of payback in terms of all of the sanctions that are currently in place against Russia. As you'll be aware, the West imposed a cap of $60 per barrel for the sale of Russian oil, which the West is enforcing predominantly because Russia is using a lot of its ships to transport oil. But in terms of being able to strike back, Russia has decided that it's going to blow the price of oil out of the water. And that's exactly what it's helping to do through these production cuts. So as we've seen the price of oil creeping up, we've also seen the price of Russian oil going up as well. And the reason for that is that not all of the oil exports that Russia is sending out are going on ships owned by the West. They have other ships that they're able to access, and also they have the pipeline where they're supplying oil directly to China. And that means that the weighted average price of Russia's oil sales is up in the mid-70s. So still around $20 below the market price, but above the $60 cap. And I'm sure President Putin is happy with that statistic. But overall, when you take a step back and look at what the impact of these production cuts is on the Russian economy, it's bad news, because even though they're getting the price of oil per barrel up, their volume of oil is reducing. And the oil game is all about volumes. You want to keep shipping as much volume as possible. Firstly, because it brings in more income, so therefore it's more valuable. But secondly, when you're talking about production, you want to make sure that your production is flowing constantly. You don't want to start literally having to cut back on production to actually stop the flow of oil coming out of the ground, because that potentially could cause major problems going forward when you want to release that flow, because you could get backlogs and cloggage and all sorts of other issues that could happen. And from Russia's point of view, they're trying to avoid technical difficulties right now because they've lost a lot of their trading relationships with companies such as ExxonMobil, Chevron, BP, Shell. And those companies, those oil majors, had a lot of technical expertise and access to technology, which Russia has now lost. So the last thing that Russia wants to do right now is have problems in its oil production because it may not be able to rectify them. So the overall summary of today's video is that the increase in the price of oil is bad news for the global economy. It's increasing costs for a lot of countries at a time when they can't really afford it. A lot of countries are on their knees right now, and as we see oil prices continuing to go up, that's going to turn the screw and apply more pressure to those economies. But from Russia's point of view, it's also seriously bad news because the Russian economy is dependent on oil income. It needs as much income as possible to keep funding the war in Ukraine and all of the other things that Russia needs to pay for. It's seen a huge reduction in natural gas sales over the last 12 months as a result of the pipelines to Europe being switched off and Russia not being in a position to be able to convert that gas into liquefied natural gas. So it's now more dependent on oil than it's ever been. So the last thing that Russia needs right now is to cut its production and therefore cut its income. But that, for whatever reason, is what it's decided to do. So the overall summary here from Russia's perspective is that these production cuts will reduce the income that Russia is earning, will potentially cause production issues for Russia itself, and is bad news for the Russian economy. So hopefully you've enjoyed today's episode, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.